Well, it is monthly Q&A time here again on the channel. A couple of days ago, I put up a community post to collect some of your questions for this video, and we've got lots of questions coming through, so thank you to everyone who did ask one. If you're interested in getting a question potentially answered in a future monthly Q&A video, just make sure you have notifications turned on for this YouTube channel so that you get notified anytime I put up a new community post. That's where I always collect the questions for these videos. If you enjoy this video, be sure to subscribe to the channel if you haven't already, but without further ado, let's get straight into some of these questions. Okay, so first question here is from Massimo. Hey Tom, you seem pretty comfortable with all the accounting terms, operating profit, return on equity, EBITDA, etc. Even though your background isn't in business, what would you suggest to become more familiar with the analysis of different companies? Is there a particular book you've read or a course you followed, or is it via all your reading plus research you did on your own? Thank you for your suggestions. Your videos are great and offer great value. Cheers. Well, thank you very much for that. Yeah, I don't know if it's completely accurate to say my background isn't in business. I mean, I don't have like an MBA or anything, but I work in a medium-sized software business. I studied agricultural science formally, which at first glance seems quite different to an MBA or something, but there was quite a core element of that degree which is based around kind of what they called farm management, and essentially that's pretty heavy on like the financial side of running a farm business, so that actually was quite useful for some of the basics. And even in my day job, I'm fairly frequently actually looking at financial statements for farms and that type of thing. So that has definitely helped. But as far as other resources, I found Warren Buffett and the Interpretation of Financial Statements really useful. That is a book that basically just goes through line by line each item on all three of the financial statements, the profit and loss or income statement, our balance sheet and cash flow statement. It's fairly American style, and there's nuances in accounting depending on what country you're kind of looking at a particular company in, but that was a really nice place to start as well. And over time, you really just do pick up some of these concepts from hearing management teams at companies talk about it, from listening to, old Buffett and Munger, Berkshire meetings and that type of thing. So, knowledge in this area is cumulative, but hopefully that gives you a couple of places to start. Let's take one from Gage. Hey Tom, love your work. Have you ever considered starting an investment fund one day, or do you prefer to invest for yourself? Yeah, I have considered it. It's definitely not something I feel like I'm ready to do yet. At this stage, I'm comfortable kind of just managing my own money. I don't really have aspirations at this stage to run some massive fund or anything like that. If I did do that type of thing, I'd probably run it in a fairly weird style, I think, where I would probably want to run largely like a one-person operation with just me investing money in a relatively concentrated fashion like I do my own money. So yeah, maybe one day. Can't say I've got plans to start anything like that in the next like year or two though. So yeah, certainly not ruling that out in future. Next question here is from the gentleman. Very often content creators interview people that provide actionable ideas, but are often then reluctant to act on it or go into further details on the topic once the interview is over. Specifically, could you share your experience with the option strategy presented by Matt Peterson, and if you did not implement this, the reason behind the unwillingness to try it? Yeah, sure. So basically straight after the interview with Matt, I was having a conversation with Brandon from New Money and Hamish Hodder on exactly this topic. Like, it's very common for a lot of people to hear an idea or be presented with an idea and never actually go out and implement it. So we were quite consciously aware of this whole problem actually after having the conversation with Matt. Specifically for me, with the selling put options to enter a company and selling a covered call on the other side when we potentially sell companies, I think that is something I am going to implement. It's taken me some time to figure out some of the tax implications here in New Zealand around that, but I think that's something that I'm going to do. All that said, since the interview with Matt, I think I've literally had like two transactions in my portfolio. One of them was purchasing into a new stock where options aren't even available, so it really didn't change that investment at all. Another one was adding to an existing holding, which that company does have options available. I guess in theory I could have sold a put option at that stage, but I didn't because I was still figuring out some of the tax implications. And if you look at sort of the four outcomes that Matt lays out when you go ahead and sell a put option, only one of those four is that the stock price kind of runs up. You never get put the shares and the stock goes up a larger percentage than what you get paid on your money for the put option premium. So even though that's only one of the four options, just by sheer kind of short-term luck, that is actually what happened in that situation. So I certainly think I will implement it kind of once I'm fully aware of all the tax implications and everything. But it's not something I've done yet, and I don't think it's harmed my returns, partially by luck, though, I should say on that one. But yeah, it's a very good point. A lot of people hear good ideas, never take any action on them. So I appreciate you asking the question. Next question here from Jack. Any updates on how you think Seritage are handling their liquidation process? No, I think we should get another quarterly earnings in the next month or two. So I'll be interested to see some more detailed updates on that. It seems like the pace of property sales over the Christmas, New Year break and everything slowed down a bit, probably for obvious reasons. They seem to be paying down some debt around the start of each month, so I think it's a good kind of tip just to keep an eye out for press releases in sort of the first week of each month. Yeah, and obviously they've got a reasonably hard deadline coming up in about 6 months now to get that first $800 million of principal paid down on their loan to Berkshire. So yeah, no major updates on my thinking there really, but those are at least a couple of the things that I'm kind of looking out for. Question from the Art of Value. Are you aiming to go full-time apart from investing with your YouTube channel? Seems like you'd have a real shot at it in the not too distant future. Yeah, I guess over time YouTube's become a more significant part of my income, which is cool. I mean, I think I took about 14 months to make a single cent off YouTube of relatively consistent effort, so I'm glad that it's sort of grown into something. Yeah, I mean, to answer your question, going full-time with the YouTube channel, that's kind of the dream. It's certainly not at a point where I can do that now, but I've got good friends who are in a similar position to me in terms of channel size and, you know, monthly revenue and that type of thing, and they've gone on to grow it into, you know, really serious businesses. So I'm certainly trying to, you know, push things and keep growing the YouTube channel and hopefully get to that point in the future, but yeah, it's certainly not there just yet. Question from Sean. I just got my plane ticket to Omaha for the upcoming meeting, but I don't know of any events to go to other than the large meeting on Saturday. How did you find other meetups / dinners while you were at the meeting? Yeah, well, congratulations. Berkshire meeting is very cool. I would kind of just look through basically all the people that you follow in this space, whether they have YouTube channels or they're people with investment funds that are likely to be at Berkshire, or podcasts or whatever it is. I would look through a lot of those and just see who's hosting events. Like I know in sort of the world of people that I follow online, last year Guy Spear and William Green had a meet and greet. I'm not sure if they'll do that again this year, but you know, keep your eyes peeled on, I guess, Guy's social media and William Green's social media for that one. I know the guys at the Focus Compounding podcast had an event last year as well. Markel, sort of a baby Berkshire, has a brunch every Sunday morning, kind of the day after the Berkshire meeting, which I think you can attend for free, so would look up some info on that. I know the guys at the We Study Billionaires, the Investors Podcast Network, are looking to have an event as well, I believe. So yeah, just keep your eyes peeled and look through all the different social media outlets for all the people you follow that potentially are going to Omaha. That's about all the advice I can probably offer you. And yeah, give yourself at least a day or so, maybe either side, to hopefully take advantage of some of those events. Okay, next question here from Frank. Hi Tom, imagine a situation where you buy what you believe is a good business at a reasonable price. the business's performance does not progress how you hope, say for example the business is significantly impacted by some macroeconomic headwinds, but the price declines significantly more than you think is fair, say 75%. Also imagine debt is sustainable and so the risk of permanent loss of capital is minimal. You are now offered a chance to buy/sell what you likely view as an okay business at a very cheap price. Are you most likely to 1, do nothing, 2, buy more, or 3, sell? Yeah, Frank, I think you've laid out pretty much the exact scenario that happened to me with Alibaba, where I thought I was buying a good business at a reasonable price. I still think that was probably the case when I got into it. But yeah, the growth and performance of the underlying business certainly hasn't been terrible, but hasn't been as good as I maybe initially had hoped. That's not to say it won't be that good in the future. They have had some macroeconomic headwinds. But I do think that the share price in that case, do your own work on this particular company. But in my view, had come down kind of more than the underlying business had come down. And in that situation, I bought a little bit more, but really I just kind of held the existing shares. So that's probably one of the tougher situations I think you can get into. Ideally everything just works out as planned or maybe even better. Sometimes, the business performance isn't good and the price comes down a little. That's maybe a situation where I'd look to sell. But in this example where the business, stumbles a little but the price goes way down, I'm going to be pretty hesitant to sell in that case because I've probably bought it at a price that I thought implied quite a bit of margin of safety anyway. So for it to dive a whole lot more from that level, I'm going to be quite a hesitant seller unless something's gone really, really terribly wrong with the business. Question here from Al Daidi. If you had enough capital and access to invest with any investor you want, would let someone else invest for you, and who? Yeah, good question. If I had an unbelievable amount of capital and access, I'd probably get in a time machine and give some money to a young Warren Buffett back in the day. But maybe someone like Li Lu. I would like to see an updated track record and some annual reports out of Li Lu's fund, but he's someone that kind of sprung to mind as I was reading that question. But the stock market's a really cool place. We can have very small amounts of capital and access some of the greatest investors on the planet, like Warren Buffett of Berkshire, for example. So that's one that springs to mind, but it's not something I spend too much time worrying about. Got a big question here from James Peets. You get $1 million and you are sick of investing and you give it to one of the punch card guys to invest. You can only pick one. Who would you give it to and why? Can't pick yourself, obviously. This is a really interesting question. I think if we go through the crew, so there's myself, Jack, Karan, Frank, and Brad. If I'm out, I guess if we just go through the group, Jack, I think, is reasonably good with stocks, but it's probably more of a real estate investor. If Jack was starting some sort of private real estate / private equity business in Houston or something, maybe I'd put some money there. But let's kind of cross Jack off the list. No disrespect to any of the punch card guys here. Karan, I think, is a really good analyst, but if I was going to put money with him, he's probably a little higher on the concentration spectrum than I'd personally be comfortable with. That's nothing against that strategy, but that's kind of my view. Brad, I think at the moment runs largely like a 5 by 20% portfolio, and he has some other smaller holdings. I think he's done Magic Formula stuff in the past and that type of thing, and he kind of just lets those 5 companies ride. So not too sure how I would feel about leaving money in that strategy. And Frank, I think, probably has the most overlap in strategy with me. He's very focused on smaller companies, but I think he's a very good analyst, turns over a lot of stones. And I think we actually have at least 2 companies in our portfolios that overlap, and there would probably be another one if the price was right for me as well. So I think probably Frank if he forced me to pick, but I think all of those guys would be reasonable stewards of capital over time. Okay, let's do one last question. This is from Don DBN. If you had to find good companies to invest in a new market, let's say Australia, where you do not have other big investors to copy, how would you do it? Yeah, sure. I guess if I look through my portfolio, there's some stocks in there that have come on my radar because they're, famous investor has bought it or something, but there's certainly a lot of companies that haven't come into my portfolio that way. But if you were looking to, I guess, follow some of the better investors that are in Australia, for example, they do still have regulatory filings if you exceed a certain ownership threshold in the company. I don't know specifically for Australia what that is off the top of my head, but Connor Haley at Altifox Capital, for example, recently had to make one of those filings with an Australian company. Outside of that, I have found really smart investors in almost any company I can think of, to be honest, by searching somewhere like Twitter. Like if you just put in the cash tag for a particular stock into the search bar on Twitter, you'll often find people that are researching that particular company. You'll find a lot of like day trading type stuff as well, which you'll just have to kind of scroll past, but that's one way I like to find info as well. Outside of that, just like any company, it's really getting comfortable with your own analysis as well. So, in terms of Australian companies that are on my watch list, because there are a few of them, they're often companies where I'm familiar with the product, or, I've seen articles or write-ups or something come across my Twitter feed over time that has kind of piqued my interest. So, for me, that's where a lot of that stuff's sourced from, and you just got to get comfortable with your own work, I guess, before buying them at the end of the day. So those are all the questions we have time for in this video. Thank you to everyone who did ask a question. Like I said at the start of the video, if you want to get a question potentially answered in a future Q&A video, just keep an eye on my community post here on YouTube. Like I say, that's it from me for this one, and I'll see you in the next video. Cheers.